Welcome to Currency Watch. This is Chris Keene from keenpointofview.com. The majors kind of zigzag today in European and North American trade as North American markets, New York predominantly, opened again for the first time this week on Wednesday. What we have going into the rest of the week is we have a bit of data coming out tonight that could have effect, but most predominantly we have non-farm payroll on Friday, which will be the last major data reading before the presidential elections next week. Heading into tonight's trading, we have the Chinese manufacturing PMI report, and we also have an Australian performance and manufacturing index report. These reports could give us an indication of how well or how strong the Chinese economy is doing, and it could weigh on risk in Asian trading. And European trading, we have almost no data. It's a flat night. And then once North America comes back into the fray in New York for the second day of trading for the week, we have the USD consumer confidence and the ISM report. Both of these reports could point to a stronger economy after a revised higher GDP report, and that could lead to a bit of volatility in the markets ahead of non-farm payroll on Friday. There's three pairs I want to take a look at heading into Asian trading. The first two pairs are the New Zealand and the Aussie. Both in New Zealand, you can see as in a wedge here that it has been rising, and it looks like the pair tried to break below the wedge, but it appeared to be a false breakout in trading today. And the Aussie is also in the almost pretty much the exact same wedge. What we're going to take a look at is that New Zealand has resistance here at 82.50. The Aussie, the New Zealand's also sitting right about a support at 82.17. What we'll need to do to see for a break for the downside, we would see the need a break of the wedge, but I would also want to see a break of the bottom of the 4-hour triangle, 4-hour pin that had the reversal in the last hour, so basically a break around below 82. And if we do that, we could see a move back down to the 81.50 followed by the 81 level. If we break to the top side, we could it's a different story, and the first target would be for a move up towards the 83.50 over the next day or so. With the Aussie, it's the same exact setup. We have the resistance zone between with the 50 fib at 103.86 and 104.10. This level has been very well respected over the last 2-3 weeks, but now with the ascending trend, what we're going to do is we're going to see a break of either side, just similar to New Zealand. We had a reversal on the 4-hour candles that appeared to be a false breakout, so what we need is if we get a break to the bottom, we need a break of the 103.50 area, and it will post channel, and then that will target a move down to the 103.50 followed by the lows here around 102.45 and so forth down to 102, and then ultimately 101.5 if we want to get very extreme, but really the first target would be a move down to 103 and then 102.50. Now if we get a break of the top side, we could be on our way towards the 105, 105.20 area. Last pair we're going to take a look at, just because it's commonly traded, is the Euro USD. As you can see, the Euro USD did break up into the resistance zone once again between 102.95 and 103.20. It reversed on cue heading into North American trading and still appears to have a little bit of legs down. What we're going to watch is the first level of resistance here at 129.50, and if we break that, we could definitely be then to the bottom of the range, looking for a move down to 128.50 in the short term. All right, everybody, have a great Halloween. Keep it safe, and everybody remember to keep your trades keen and to play it safe. This is Chris Keene from A Keen Point of View, and this is Currency Watch.